Finance Minister Nirmala Sitharaman will present her first budget tomorrow. The biggest challenge before her is to boost economic growth without a significant compromise on fiscal prudence. So what do foreign investors expect from the government this time? To discuss this, we are joined by Mark Mobius, partner and co-founder at Mobius Capital Partners, joins us from our studio in Singapore and is a veteran of arguably many Indian budgets and many emerging market budgets as well. Mark, good having you. Thanks so much for joining in. What's your sense? The first budget of the new NDA government, they probably have the leeway in the parliament, but do they have the leeway on the balance sheet to spur growth in the Indian economy?
Well, the good news is a woman in charge, and I think that's probably going to be a very good thing for the budget. I think a woman can watch these pennies much more carefully. But I believe the government has a lot of room. First of all, they can lower interest rates further. And, you look globally, interest rates are headed down almost everywhere. In Europe, it's a negative rate. It's just insane what's happening. But the reality is it's very good for India. The other thing is I believe that the Indian government could afford a greater deficit. I believe 3.5, I think it is now, against GDP, could go up. And they have a lot of room. I believe they could go to 5.
All right.
So there's a lot of leeway. But the bottom line is how the government is going to spend this money going forward and how they're going to increase two things. One, employment, and infrastructure spending.
So just let me get this clear. When we talk to our Indian economist, a print of 3.4, which was the estimate fiscal number, if that gets pushed to 3.6, that could have a negative setback. But you're saying even if it goes up till 5, it's not that bad.
Exactly, because you have a fast-growing economy. The economy needs more and more finance. I mean, if you look at infrastructure spending in China compared to India, India is about 15% of what China spends. And India is not 15% of the population of China. So India has to do a lot more in terms of infrastructure spending. And by doing that, it will boost productivity and it'll boost the economic growth of the country. And therefore, the deficit will not have a big problem because the government will be bringing in more taxes.
But that too is a bit of an issue right now because, their tax collections have not been up to the mark, which puts their FY20 projections in question. So if you're talking about expanding your, the fiscal deficit number, you need to back it up with the income from somewhere else, right?
Well, I believe that another factor is privatization of state-owned enterprises. I think the government can bring in a lot more income by selling off a lot of the state enterprises, or at least selling off parts of them, which will do two things. First, it'll help the budget, and secondly, it'll increase productivity. So I think that's one area they have to look at. But don't forget, we're looking at short-term. Yeah, short-term, there are problems with tax collection, but long-term, I believe if the government is able to make the bureaucracy more efficient, that'll be not a big problem. They have to make it easier and with less bureaucracy and make it almost automatic paying of taxes.
Mr. Mobius, just a point, because you look at so many emerging market economies and you've looked at them for so many years, if indeed there is a fiscal slippage that happens from the path that was earlier guided to, but it is used for presumably spurring growth, you believe foreign investors will not be perturbed. The other fear, of course, is that rating agencies might come in and have some action on their rating on India as well. Even that, to your mind, will not deter a foreign investor?
I don't think so. Of course, if the rating agencies put India into the B- or C class, then that's a different story. But I believe that that's not going to be a big issue. The big issue for investors is growth, and infrastructure, of course, contributes to this growth. So important. And unemployment. Those are the big issues that have to be tackled by the government. Once those are tackled, then all the other issues will take care of themselves.
What about, let's work with an assumption that there is some minor tinkering on the fisc and that is used to spur growth and there are no other major large negatives in the budget. Does India then look favorable, or would you believe that India would largely remain a bottom-up story irrespective of what happens to the benchmark indices? Because I believe that was your view the last time.
Well, I believe you can see what's happening. The benchmark, the index for the stock exchange is doing very, very well. And that means that investors are having a belief that India is on the way. They're going to make the changes that will be very good for the economy. So I don't think that's a big issue. What I think we have to see now is some real, very forceful movement on the part of the government to bring these issues to the fore and identify where the growth can be. Of course, they are giving these payments to the farmers, which is good. A short-term move, fine. But in the long term, they have to tackle the unemployment issue. And that means you've got to have people building infrastructure and, of course, bringing them into the urban areas.
Which brings me to my next question, which was an industry that you liked. Infrastructure as an industry is something that you have been liking for some time now, particularly the pipe makers and steel manufacturers, and that was our conversation last time. Is that a space which is still a favorite, and on the back of the fact that you could see some favorable budgetary announcements with a push to infrastructure, does that continue to remain an overweight for you?
Yes, that's continuing to be overweight, and we're looking at a number of companies in those areas, infrastructure related. You mentioned pipes, cables, that sort of thing.
The other pocket of this also that you have been talking about has been the NBFC space. Now, obviously, the liquidity constraints may not be as bad as they were some time ago, but it's still bogging down the system. Do you think that now is the time to probably start picking and choosing from the leftover good quality NBFC names and starting to add more weight in each individual portfolio?
I'm glad you mentioned that, because that's the other area we're looking at, the non-bank financial institutions. We believe there's some bargains in that area as a result of the problems they've had. And of course, with liquidity coming back, with the new reforms, these companies should do fairly well. By the way, don't forget, these payments to farmers, which will be coming in, will improve consumer companies. And that's the reason why you see many of these consumer-oriented company stocks doing so well. But that also means that these companies that are serving that sector will be able to pay back their debts, and that will help the non-bank financial institutions.
Mr. Mobius, your India dedicated funds, which you said have started focusing on the smaller companies, the smaller mid-cap and small-cap names, has there been any material change in terms of adding new stocks from any particular sector or starting to gain weight from any particular sector?
Well, I would say those infrastructure-related companies, manufacturing companies, are the ones that we've been adding to very selectively. You must remember, our fund is very focused, and we also want to focus on corporate governance. We want to help companies improve their corporate governance. And so we have to pick very, very carefully which companies we deal with, because some companies are not interested in making changes, and we only want to deal with those companies that are going to make changes in their governance.
Do you think this is the bigger problem in the current standing, where we've been seeing the kind of companies that have been faltering on corporate governance and being thoroughly punished by the investors?
Definitely. It's a big, big issue. Not only in India, it's a global issue. Corporate governance is now coming to the fore because ESG, environmental, social, governance issues, are now foremost in the minds of investors. I just came back from a trip to 5 major cities in America, and everyone we talked to said, look, what are you doing in terms of the environment? What are you doing in terms of social factors and so forth? And in order to impact those 2 factors, environment and social, you've got to do something about governance. So we want to talk to companies that are willing and able to improve their governance.
So would that tip the scales with regards to the earnings projections of those companies versus corporate governance?
Definitely, because what we've found is that companies that excel in ESG perform better. Of course, you can buy index stocks that have the high rating already, but what we're interested in are those companies that are willing to improve their rating so that they can see an improvement of their stock price as well.
Okay, let's talk about the infusion of liquidity now. And over the last few months, we've been seeing the foreign institutional investors been sitting on the sidelines for a bit. U.S. equity markets, on the other hand, making record highs in anticipation of rate cuts from the Fed this month. Do you see, with all this excitement around U.S. equity markets, the incremental capital will actually stay in U.S. rather than come to the emerging markets?
No, because in talking to investors in America and investors globally who are heavy in U.S. stocks, they realize that they're vulnerable. They have to diversify. Everybody is in these ETFs, for example, exchange traded funds. They want to get into active managed funds to diversify and reduce their risk. So I believe that as a result of interest rates in America moving down, and as a result of people being overweight in America, then you're going to see some money going into emerging markets. And already we're seeing the performance of the Emerging Markets Fund doing a lot better.
Mr. Mobius, one last question from my end. How have you read into this whole love-hate relationship between US and China? And now that it is presumably showing some signs of resolution, let me choose my words carefully, would you believe that there is a bit of a risk-on possibility that could emerge in a big way?
I don't think it's going to be a big issue, because I believe both sides realize that if they go too far, it'll harm both. I believe, however, that the U.S. has a little bit of an upper hand in the sense that the trade deficit that China has imposed on the U.S., where the U.S. has huge trade deficit, 300 billion plus, that means that America is in a much stronger bargaining position. Nevertheless, I don't think Trump will go too far. He will want to make sure that there's not too much harm done to U.S. trade. As you know, the meeting they just had resulted in some concessions on both sides. So I believe that will be okay. Nevertheless, a lot of business from China, particularly in the high labor area, is moving to other countries, to Vietnam, to Bangladesh, and hopefully also to India going forward. So I believe that is going to be an opportunity for India.
Okay. Mr. Mobius, at this point, we're seeing different asset classes also looking interesting from an investment standpoint. Gold has started giving returns after really long. We've seen the money markets in the US working well for investors. So compare that to equities as an asset class, which is already trading at extremely elevated levels, record highs on the equity markets. New capital, does that go into any other asset class? Do you diversify?
Well, you've been hearing about the Facebook plan for a virtual currency. Bitcoin prices, you can see, fluctuating. I think they've been moving up recently. So that's a totally new area which is creating lots of question marks. And I believe one of the reasons why gold is moving up is people are beginning to think, well, maybe we should, avoid some of these virtual currencies and put something into gold, because if these virtual currencies begin to take over, we really don't know where the valuation will be. And you can see the tremendous volatility of Bitcoin is a case in point.
But you wouldn't pull money out of equities to put into commodities?
No. I believe that equities is the way to go, particularly at this stage. But please remember that commodity demand is still moving up. A lot of people look at these commodity charts and they look at the price or the volume in terms of cost, but they don't look at the actual physical volume. And the physical volume of all these commodities is continuing to move up, which means they're continuing demand. for all of these commodities.
All right. Mr. Mobius, one last question before we wrap up this interview. The last time you said that you are ready to put much more money into India as compared to China as well, even if the valuations look stretched. Is that still something you stand by?
Yes, yes. In fact, if you look at our portfolio, you see China is still a little larger than India, but India is moving up. As you know, we had a late start. We had to get permission to move into the Indian market, and that took time. And now we're catching up.
Well, we hope that the stage is set for you to have a very favorable time in your new role in India. Mr. Mobius, thanks so much for taking the time out and speaking to us at Bloomberg Quint.
Thank you.